The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 15th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Hey, if you can't dial in, let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 203 points, 24,696 is the print. S&P's down 21. NASDAQ Composite off 90 points. Russell 2000 is flat. Now, I'm literally just sitting down in front of my screens. Have been gone since about 7:30, quarter to 8. So it's been a whirlwind and literally sped back to get here. So I'm just checking out these markets. So that's a beautiful thing because we're going to go try to figure out what's going on out here. Semiconductors are down nearly 2%. Well, we know what's going on. We've got the markets that are trading lower. We're going to try to figure out what does that mean. Trannies are down 52 points. New York Stock Exchange down only 0.5%. Something to think about. Spot volatility index up nearly 11% as we speak. We know what that means. Of course, it's an end-of-day reading. You and I could give a darn what it is at just past 1 o'clock in the afternoon. Not that we could give a darn, but we know that it's an end-of-day percentage that's going to be key to what the markets are going to do next. Goldilocks is taking a tanker. Yes, down to the South Seas, down $27.60, trade out at $12.90. Silver's off 37%, so that's a little over 2% as well. Leading the charge to the upside is NXP Semiconductor. You know what? I see since I left this morning, I'm going to have to reboot this system. Always risky to do that during the show, but I can't tell you who's actually leading the charge the upside dollar-wise. To the downside, looks like it's Tesla off $9. Home Depot down $260. Alibaba down $250. VIP Shop Holdings down about $3. So no huge dollar leaders. That's assuming that that segment, that portion of my chart is correct out here. Nonetheless, let's go try to figure out what is the market communicating to you and I. Well, we had topping patterns that were in play. Specifically inside of the NQ, the ES as well on a 5-hour chart. On the daily time frame chart, the biggest topping pattern out here was inside the NQ. So let's go focus our time here, try to figure out what it is doing. Now, you might say, why was yesterday or why was there a topping pattern? It's really very simple out here. It's because it completed a Gartley sell pattern. Now, for those of you not familiar with H.M. Gartley, he published his book many years ago. I used to know the exact year, but the price value, the price of his book was the equivalent of a Ford F-150. in today's, I think even in today's terms out there. So that's quite an investment. But the secret inside his book, or one of the cool patterns, brought to us by HM, but really by LP, Larry Pesavento, who really popularized it, was really the A to B equals CD pattern. But it was the A to B equals CD pattern in a move that you had wanted to get in on but didn't. Now, what do I mean by that, or what did HM mean by that? HM meant, let me get my crosshair, that if you were taking a look at this move from March the 13th inside of the NQs out here, and you saw that it made a huge beeline down the lows on February or on April the 4th out here, and you said, I really wanted to get in on that move, where would be the best place to get in? And what HM taught you, me, and everybody else was sell the first A to B equals CD. Now, there's a trick to selling that A to B equals CD pattern, because as we have learned many years later out here, is that A to B equals CD patterns don't necessarily always complete a 1-to-1. Sometimes it goes on to 1.272, sometimes to 1.618. And what I'm referring to there is the expansion of that C to D leg. A to B, the market already does that for us. In fact, the market does 75% of the work because it does the B to C leg. That just means you and I need to master that C to D leg out here. That's the last leg in this move. Well, yesterday, as a master of that, what it did was it created a bearish reversal candle. As we came into the close, it was a nice little shooting star. Now, for those of you not familiar with the shooting star, it is the opposite of the hammer candle. They either work or they don't. Well, what we know as we speak right now, 1:12 in the afternoon, it worked. It worked because you see follow through to the downside. Now, let's say you're not short the market right now. Do you jump on board at 112 knowing that you have a double G confirmation of a Gartley? Now, the Gartley pattern looks like this, folks, because you just start with your X point. X marks the spot, and that's really the high of March 13th. So we'll go ahead and we'll color in that pattern out here so you can see exactly what it looks like. Two beautiful, as we'll call them, butterfly wings out there. Nothing that's four. So would you get in right now? The answer would be absolutely positively no, you would not. Or I would suggest that you don't at this stage of the game. Wait for some more information. If we have a spot volatility index that closes with a one-day rate of change greater than 10%, and we're still in a bull market out here, I don't care what anybody tells you. We're still in a massively bull market out here. We ought to see some type of bounce or bottom. It's one of the other inside of the S&P 500 or at least the ES Mini overnight. But we just have to take things one thing at a time. Now, the other reason to say, just hold your horses here. You see, inside the NQ, let's take the side that the market is absolutely bearish. Steve is wrong. The bear market began, and the NQ is the real signal here. Well, if that's the case, then this market is going to get crushed to the downside and maybe even make an A to B equals CD to the downside. In other words, lots more room to the downside. So the reason that I would say at this stage here, don't take any action and wait a bit is let's say that those folks are right that are in that camp. Well, then what we do know is that price is going to go ahead and move through Stevie's red line. If you take a look at Stevie's red line right now, inside the NQ, it's trading at 68.35. And here's the thing that both bulls and bears do not know. I wish I could tell you what the answer was. I just know what the outcome is. And the outcome was as soon as price moved above the price oscillator, bottom panel of our screen out here, as soon as it moved above zero, which was back on May 9th, it was telling us that price and Stevie's red line would catch up with each other. So when we come back from this break, let's talk through that as well. We'll look at all the charts. I'll go check my email, see who sent in all those questions out there, because we're going to answer every single one of them. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're trying to piece together the market out here. And what we're doing specifically is dealing with the NQ, the futures contract. And the reason is because it provides you and I with the most information. Quite frankly, the most accurate information for those of us that are pattern recognition traders, which each of us that are here right now are, or we're learning to become pattern recognition experts out here. And Stevie's red line, it's extraordinarily important, both in bullish and bearish moves out here. And price coming back and testing it when the price oscillator is above zero is nothing more than just a retracement back to support. And just as an example, if you take a look at my chart out here, you just come from the bottom in January 2nd, and you can see several tests of Stevie's red line as the NQ pulled back, tested, rejected, and moved higher out here. So, and it is a phenomena. I do not know the answer. I'm sure there's a math answer out here. I'm sure that you know, some mathematician is turning over in his or her grave out there to say, well, I can tell you exactly why it happened, Steve-O. I don't know. You don't know. We don't need to know. We just need to know electricity works. And this is electric out here. And so what we take a look at it is just the ability to anticipate that once that price oscillator, in whatever time frame it is you're trading something, gets above zero, bottom panel, what is it? It's the difference between two pieces of energy out here, in this case the 19 and 39-day exponential moving averages, that once the price oscillator gets above zero, there's a magnetic desire for price and Stevie's red line, the oscillator and change line, to catch up to each other. Doesn't tell us when, you just know it's coming. It's kind of like the folks over in Hawaii. They keep saying that Kilauea volcano, we haven't seen the big one yet. I think they know something, just like you and I know something here. So if you're not in on the short trade, jumping in right now when there's only about a 35-point spread or so between Stevie's red line and price says, price could easily come down here and hold this support. And if it tests it and it rejects it, then what price is going to do, price is going to head up to the 7,100 area. or so inside the NQ. And today and or tomorrow will have been nothing more than price pulling back to a level of support. I don't know what the outcome is going to be. What I do know is if price breaks through that level, right now it's printing at 68.36, then there's a real good chance that we've got something more serious with regard to a decline that is in order here. And we have to pay attention, in essence, to the NASDAQ 100, the NQ out here for those signals. They are the ones providing us with the most amount of information out here. When you say most amount of information, what do you mean, Steve-O? Well, that's the daily time frame chart. And, you know, here at TFNN, we like to use multiple time frame charts out here. The one chart that has provided the absolute best single best piece of information with regard to what the market wants to do. It's the pattern that I had taught subscribers last month. Of course, I've got a new workshop that's going to be just as important that I'm doing a week from this coming Wednesday. So if you're not a subscriber, have never been a subscriber, now is the time to go sign up for that. But forget that commercial. Just pay attention to the chart out here. And you take a look at Stevie and your favorite pattern that you've learned how to trade now. And you can see since the January 23rd high, when the market made a high, the NQ as well did out here. It made its top, its bottom, its top, its bottom, and then it went ahead and took a break and made a seventh wave move. You know how during baseball season we love to see that seventh inning stretch. That was then another top. Then it made that bottom with the pattern. And then yesterday at 5:15 in the afternoon, it made the most recent top out here. So this could be, just as it has been in the past, a serious decline that is about to unfold. I don't know. What I do know that is slightly different than what we've seen for a while inside the NQ out here is that price oscillator is above zero. So then where do we go to next? Well, I'd say where I would go to next is one of our best friends. And one of our best friends happens to be those TAS market profiles. So we've got to go take a look and see if we can figure out what the heck is going on. Now, we're going to go take a look at the NQ out here as soon as I can find it. There we go. And then we're going to look at 5 different time frames out here. So we've got a 60-minute. Now, right now in a 60-minute time frame chart, what we can see is that price in the NQ should be at really strong support. Now, I know somebody out there is saying, all right, Steve-O, how in the heck can you say that? You were gone for the last 4 hours. Was it 4 hours? Yeah, probably, or more. And then you come back, you sit right in front of a computer, you plop a screen up on your chart, or you chop a chart up on your screen, and you immediately say to me, or sell to you, that the NQ is at really strong support. Well, this is just a glance. All you need to do is just glance. It's just the facts, ma'am. Right? Who used to say that who used to say that in what was the name of that show out there? Gannon and Dragnet, right? Dragnet. Well, the reason why you and I can say that, we're looking at a 60-minute time frame. In fact, let me just turn off price, because then Joe Gannon, because we'll go ahead, we'll take a look at the same thing at the same time. What's missing from the brand new profile that formed during the last hour inside the NQ? Right? Usually there's 3 lines out there. Usually there's a green one, a cyan one, or blue, light blue, and red. Do you see the light blue one anywhere? And the answer is, oh, no, you don't. Now, this is what I've learned. Remember how we talk about a bullish or a bearish structured box out here? And we're always looking at that center line and saying, hey, when that center line is closest to the top or bottom, it tells you whether you've got a bullish or bearish structure out here. Well, guess what? It doesn't exist, does it? Wrong. Not so fast. Because it does exist. The center line of the box is right there at the bottom. They're both at 68, 70, 60. So we know that that is supposed to be strong support. It is strong support. And if that level fails, it's communicating a lot to you. For those of you that are short, that are intraday traders out there, you want to see price fail at that 68, 70. What was the level? I want to give it to you again. It was at 68, 70, 60 out here. But right now, it's strong support. It's been tested a few times during the past couple of hours, but keep an eye on that. At least I would. Because if we take a look at the next area of support that you want to be focused on, that you want to see break through that wall, if you are a bear, is the top of the daily box. Now, you'll see that the daily chart, which is the panel number 2 from the right-hand side, what you will see out here is that the bar is orange. Now, look, that's not saying we're going to make some kind of weird daiquiri or whatever it might be. What it's saying is there's a new profile that's getting ready to form. May show up tomorrow morning, maybe even this evening out here. It doesn't have to. But here's the other thing that you and I know. What Price has done is just simply come back and tested a level of support, because it used to be a level of resistance. And that level is the top of that box. And that looks like that is at 68.67 exactly. No pennies, no nothing. So what we know is you've got really strong support on a 60-minute basis, and you've got really strong support on a daily time frame chart out here. Doesn't mean that those levels will hold. But if you're wondering, why did price stop where it was, you now have the answer. And if you're asking, where's that next floor below, we'll forget about the profiles. We'll just simply come back to Stevie's red line, that all-important 68.35. So we get back from this break. Let's go look at something else, because I probably bored you to death with regard to the NQ. But it's for a purpose. And the purpose is there probably is no more important chart, set of time frames for you and I to look at to really gauge what this market is doing and why and where it's likely to head next. This is Steve Rhodes with TFNN. Dow's off 218, S&P down 22. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's off 218, S&P down 22 points out here. So let's go to our first question. That coming from Larry C. Larry in Detroit. So Larry writes in, hello, Steve. Hey, Larry. Please go over your current take on gold and the U.S. dollar. With this gap lower today, under the 200-day simple moving average, has your stance changed? The weekly GLD chart also looks very bearish with the April 13th candle looking like a shooting star, a Basil Chapman Phantom Peak G, and a double top. That's a lot of patterns out there, Larry C. I'm wondering how low gold could actually go, and also where the TAS weekly, monthly support levels are. Okay, so that's a mouthful. Let's see if I can assist Larry with that. Let's start, Larry, with the U.S. dollar index out here. And we'll try to take this stuff one at a time. So what's the U.S. dollar index doing? You know, we took a look at the NQ as an example. And what we saw was a Gartley sell pattern that formed yesterday when that shooting started. Today's confirmation because prices traded lower, assuming that it closes that way at the end of the day. It's absolute confirmation. Now, if we take a look at the U.S. dollar index, which has had a nice run, well, really it's had a nice run since 2008, right? U.S. dollar index bottom when? If you were in the Jeopardy, you would answer it and you would say, you got to answer that with a question, right? So how would you do that? The answer would be April in 2008. That is when the U.S. dollar bottomed, made its bottom. Probably its all-time bottom out here. But either way, that's when it bottomed. So in essence, we've been moving higher ever since then. But back to the Gartley sell pattern. Stay on track, would you? Well, here's a beautiful Gartley sell pattern in the U.S. dollar index, or so one would think. The difference between the two, and there's one difference, we never really got a bearish reversal candle at this top in this A to B equals CD. We did get one, and I take that back. We did get one out here, but it failed. And what do I mean that it failed? I mean it failed. Come on, work with me, this cursor. Get out here so that Larry and I can go take a look at it. This trading day right here, Larry, May the 3rd, that would have also been a Gartley sell pattern because you got that bearish engulfing. But the very next day, you got no follow-through. Today, the NQ, we have follow-through. But either way, follow-through or not, what we do know is that the price oscillator, you can see how it got above the zero level back here on April 25th. And in essence, what you and I as chartists have been waiting for is to see price and Stevie's red line catch up to each other. Well, that's what it did 3 days ago. It did that on the trading session of May the 11th. Notice how price came back, tested it as support. All price was doing was retracing back to support. There were a lot of people, I heard them, at that stage were just simply saying that the dollar was toast. French toast, whatever kind of toast, rye toast, wrong. The only kind of toast it was toast that was going to get buttered, buttery toast. You got to like buttery toast, just simply because it was coming back to test support. In essence, that's what the U.S. dollar index did yesterday. Tested the red line, closed over it. Today, we're bouncing up higher out here. So we really don't have the Gartley sell pattern. We're in potentially wave number 6. Maybe there's another wave count. We can always go take a look at off of that C point out here. Let's go do that little count, see where we're at. Oh, well, that would put today possibly at wave number 7, Larry C. in Detroit. Now, we know at wave number 7, you can see the most significant declines out here. But if we were, and the U.S. dollar index was going to move lower in this bearish Gartley pattern that is trying to set up, then what you're going to have to see out here is a bearish reversal candle. Not likely to happen today. Would have to happen tomorrow, or maybe it's the next day, but let's just call it tomorrow. And then you need to see it close below Stevie's red line, currently at 92.63 out here. So that's what the U.S. dollar index is doing, at least what I see. And what it does is it, as a frame of reference, helps us to understand what I was discussing when we were taking a look at the daily chart for the NQ, and why you really want to get confirmation as opposed to just a retracement back to support. Now the answer to your question, if we get this off the screen, is, well, what's gold doing? And I know you were focused on the U.S. dollar index, but boy, I have problems only looking at gold priced in dollars. I think I would do you a disservice, me a disservice, everybody else a disservice. So let's go see what's gold doing in every currency out here. Well, in dollars, it's broken through support. In euros, it's pulling back. In yen, it's pulling back. And in pounds, it's pulling back. So the Gold is not getting any traction anywhere out here. If you're in Europe, you're selling it. If you're in the U.S., you're selling it. If you're over in Japan, you're selling it. If you're over in London, you're selling it, maybe to give a gift to the royal couple out there. But there's nobody that I see right now in these major currencies that are doing anything other than selling gold. So let's go back to another chart and let's try to figure out, well, you talked about profiles, so let's go take a look at that. I don't think you or I are going to like what we see out here, or if you're a bull, which I had been, and I'll have to reassess that come day's end. If we go take a look at the gold contract, I think we're below profiles all the way around. And we are, Larry. So if we're looking for some support out here, it's not available, not with regard to market profiles. You're below the 60, you're below the 240, you're below the daily, you're below the weekly out here. That's just the way that it is. Now, does that mean that this thing is going to crush lower? Look, on a weekly time frame chart, what you and I know at this stage of the game is it's been making higher lows. And it's still the same case as we speak right now. So let's not let you and I get head faked out here, like maybe the rest of the world. Let's not fall for that. Instead, what you and I have to really look at is to try to find some other patterns out here, to look for that next bottom. Where is that next bottom? And there's nothing more fun than doing a little bottom fishing. That's where you can get those big groupers out there, and that's what you and I are after, is a big grouper inside of the gold contract. So how do we figure that out? Where is it that price is likely headed to? So I don't know. Let's take this chart here for gold. Let's see if we can figure that out. Well, one thing we know is gold's been consolidating. Okay, so that's one thing that we know. And we can take that consolidation box. Those, in essence, are the black lines out here. Let's go ahead and grid a rectangular box so we can just move it down here. Let's see. So in essence, there's our rectangle, Larry. So, well, I screwed up on that. Let me see if I can expand it just a tad. I don't know why the system's not working exactly like it's supposed to. There we go. So there, if we just simply add the consolidation break to where we're at, well, that's going to take us back beyond the lows that we saw back here in December. Yeah, that's what it's saying to both you and I. Let me get the cursor. That looks like it's in around the 1230, give or take. We're not being exact as we speak right now. But so there is one level, around 1236. There's your measured move of the consolidation. And I have to say that is absolutely in play. We know that price has tested Stevie's red line. It did so this morning. It did yesterday. We've got a falling price oscillator below zero out here. There's no A to B equals CD pattern, not in the daily time frame chart at least. If we're going to go look at a weekly time frame chart, let's come back over here to our TAS market profile chart. Let's see if we can try to figure that out. Well, if we try to figure that out, we're not going to like what we see, and we're not anywhere near that level. So where's gold headed to? Larry C., the first place that we've got to pay attention to is December 11, 2017 on a weekly basis, and that's anywhere between the low of 1247 and 1273. The 1247 fails, it's in that 1230-ish range that you and I just looked at. I hope that answers all of your questions. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So there's a couple questions that have come in. One is back to the U.S. dollar index. And the question was, if the Gartley sell pattern takes effect out here, where is it that the U.S. dollar index could pull back to? And so the very first level that you'd want to pay attention to is the brand new, not brand new, it's a long time weekly box. We know that the top of it, those are the green lines. Let me just turn price off. You can take a peek at this. So you'll see the profiles. Oh, let me turn off the retracements as well. The Fibonacci. Oh, I can't do that until I do this. There's the Fibonacci, and we'll turn that. Oops, there we go. And there's you can see the, oh, I was going to turn price off. There we go. So you can see the top of the box, 93.27 on the weekly basis, and the bottom basically around the center of the daily, which is 92.08. So that would be the first target area. The other thing is if it really is a Gartley sell pattern, right? It needs to have a bearish reversal signal before we can call it that. There's just no two ways about it. I think I owe Tom a buck because I know he says that a lot. So that's a royalty I owe Tom. If it turns out to be a Gartley sell pattern, Gartley buy and sell patterns have 5 different outcomes. First outcome, 0.382 retracement. The answer to your question, 91.23. The second one would be the 0.618, 89.37. The third one would be the 0.786, 89.10. So it's just like building a house with a multiple-story house out here. It's got to be one brick at a time, one floor at a time, and that's what we would look at. Where should the U.S. dollar index find some really significant support? You'd have to say at the 0.382 level, the bottom of its daily box, 91.23 out here, and that's the way that I see it as we speak right now. I hope that answers the question that was put out there. We've got another one, which is from Phil. Phil writes in, hi, Steve. Hi, Phil. I noticed the GDXJ, the junior miners, have only moved down around 2%, with gold down about the same amount. Silver moved about the same amount also. Typically, as you frequently point out to us, all three move 1.5 to 3 times as much as gold. Is this a hidden positive divergence, perhaps? I've always shared with you that if metals are finding a bottom, that your better investment, this is to the upside, remember, a bottom, your better investment is inside the mining equities, either the entire sector versus the actual metal itself. Because when there's traction, you will see outperformance inside the mining equities. Why? I don't know. It's just works that way. I don't know your answer to the downside. So I can't confirm or deny, or plead the fifth or anything. I don't know the answer. So you'd have to go back and do the work. But either way, is there any kind of hidden meaning behind it? And where is it that the GDX itself could head to? And what we can see here right now, well, let me see if I can put the profiles up here. I know I can. I just don't know how long it's going to take once I actually finally get there. Because it's got to compute. But let me try that on this chart out here. I believe we're going to see they're down below. Yeah, they're down below the bottom, which is 22.57. So it looks like to me, Phil, and you still have a price oscillator above zero, but it's falling. So where price is headed to, or should be headed to, is this little red dash line out here, right around the 21.85 level. The other thing you and I can do to gauge what is the GDX doing is go take a look at today's volume versus the swing point that it's trading in. So we should do that. The swing point that it's trading into, let's get rid of that A to B equals CD. Not that it's not active, but it's clouding our judgment right now, is the swing point of May Day, May 1st, 31 million shares. You're coming into it with 28 million shares. So even though you haven't tested it, the low of which is 22.04, if you close anywhere underneath 22.37, says you're going to go test it. Are you going to go blow it away? I don't know the answer to that. But you could easily get down and go test the hammer candle. That is when the GDX most recently made its bottom. That was back on February the 9th out here, 101 million shares. We're nowhere near that level. 21.68 is the number. The low is 20.84. The first test on this next move could be, should be the low of May the 1st out there, 22.04. You get below that, Phil, then I say it doesn't matter to me if it's there's a correlation of 2 to 1, 3 to 1, or anything like that along those lines. I say you still get down and probably at least test the top of that hammer candle, or maybe even the low. But you got 101 million shares down there likely to be tested. That's on the GDX. No reason for you and I to go take a look at the GDXJ out there. I'm sure we would get some type of similar piece of information. So thanks for writing in. I hope that answers your question out there. Let me see if we've got anybody else who wrote in. I think we have been able to, we've been able to address every single question that has come in, I think either through the den. Let me take a quick peek. Well, no, I haven't, because Danny says, hey, if the Gartley fails, which Gartley, Danny? Which Gartley? You're talking the U.S. dollar index Gartley, or which one? Danny in Atlanta. Help me, Rhonda. Yes, the U.S. dollar. Well, it hasn't failed. I mean, it's only potentially forming, right? It's only potentially forming. So your question really, I think, is better addressed if we go ahead and just simply, I don't know what that big red button is. That's pretty weird. But because I have never seen it before. But there's many things I have not seen in life. Where did that red button come from? That's pretty. I got rid of it. I think the better question, the better way that I can answer your question, Danny, is to move up a time frame and go take a look at the weekly chart, right? Because the weekly chart, what is its message? Well, the beautiful message is the way that it made a bottom, just like we saw the tops made inside the 5-hour chart, inside the NQ. This pattern, folks, if you were going to learn one pattern, it would be this one that you and I take a look at bottoms and tops out here. You would want to learn it. You'd want to memorize it. You want to teach it to your children, your grandchildren, their grandchildren, because it's worked for the last 130 years. It'll work for the next 130 years, too. And don't you really want them to become masters of being able to time the markets? I mean, it's all the tools and information that's available to us. Well, look, to get back to Danny's question, if we were just focused on the weekly time frame chart, what you and I would say is this thing has got a lot of momentum. You're only in count 5 of your time to mark setup counts, and it looks like we're going to get that this week. Typically on high momentum markets, you at least get 9. That would say you've got another, in essence, 4 weeks, 5 weeks. Counting this week of, in essence, move to the upside. And all we really have to take a look at out here is where's price headed to. On this chart, Danny, it would be the green dashed line. If you and I were just taking a look at this, look, we can't ignore the most recent swing points coming back into October of 2017, around the 95 area. You and I know that that would become the initial target. But beyond that, if price is able to get beyond that, we'd be looking at 97 out here. So it does look like the U.S. dollar index wants to continue to move higher out there. Does that mean that gold is done, it's over, it's toast, and so forth? No, not necessarily. You and I know differently. We just need gold to be getting traction in all currencies out here. It means the metal has got to find some value. And today, it's kind of value less, so to speak. Is it all about the U.S. dollar index? No, I wish it were. I got to tell you, I was on my drive back as I was speeding in the left lane, cautiously, eyes on the road, no phone near me, anything like that, just making sure that I could get back here in time. I heard somebody say that the entire reason that the market crashed was because rates were moving higher. They were on CNBC. I don't know what they smoke over there or what they drink, but it's Kool-Aid, because nothing could be further from the truth. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So look, I don't mean to be hard on people necessarily, but I hate misleading information. What I will call intentional misleading information. You know, the guys over at CNBC, they get access to that Ken Show database. You know what I'm referring to? I don't have a Ken Show. Our Ken Show is right here on the charts. That's our Ken Show, where we get to go back and we get to play liar's poker. Now, look. granted, I just happen to have the interest rates for the 13-week T-bill out here, but it accomplishes the same thing, you know, no matter what we take a look at with regard to interest rates and the markets. And the top panel is the S&P 500. It's not like you and I are taking a small amount of data out here, because here's the idiocy, if I can actually use that word, well, I just did, of their statement that interest rates are moving higher, and that's what caused the market to tumble the way that it did. Because if there's anything, if that logic is true, then you got to take all your money out of the stock market today. Do they even realize what in the Sam heck they are saying out here? Because our interest rates going higher or lower? Duh, that's a really hard one to figure out, isn't it? Look, all you have to really do is take a look at this chart. This one goes back into the 2000 time frame. And there are times where interest rates are going to go lower and the stock market goes lower. That's what it did back here between 2000 and 2003. Interest rates went lower. The S&P went lower. But that logic doesn't even make sense with regard to what they had just regurgitated. And take a look at interest rates go higher and the market goes higher out here, up to the 2007 top. And then from 2007 to 2009, interest rates moving lower, the S&P was moving lower. And take a look at where we're at right now. Interest rates, once they started to rise, the S&P continued to rise. Don't listen to that malarkey. Don't listen to that malarkey at all. Just continue to stay tuned to TFNN. And there's no better place to stay tuned to today, because coming up next, your favorite polar bear and mine, David White, what an awesome trade he made yesterday. Several trades. So why don't you attend his workshop? He's got a lot to offer and a lot to teach. Folks, thanks for being here. We'll see you on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.